the 2022 financial year, and this document really tells us what the government plans to do in 2023. What a budget also seeks to do usually is to report on economic performance in the current year. So the government told us what they did in 2022, challenges they faced, and what they wish or hope to do in the next year to improve the situation of our economy. Another thing the budget does is the government tells us how much they expect to raise in terms of revenue and how much they expect to spend in terms of expenditure. And they tell us the gap or the deficit, as economists will call it, and how they seek or plan to finance it. So this session has a 5-point agenda. The first is we'll look at some brief highlights of the 2023 budget. Remember, I said the focus of this session is on the revenue aspect. So how does the government seek to raise their revenue target for the financial year? So we'll look at some quick highlights of the budget. Then we'll zoom straight into the direct tax revenue measures. Then we'll take a look at the indirect tax revenue measures. Then what I choose to call general or administrative tax revenue measures. And then some final words and recommendations. And then hopefully take a few questions from our audience. So before we start, I like to call it housekeeping rules or disclaimers. In the profession, you don't do any of these things without disclaimers, right? So that is very much in order. The first is that the scope of this will be budget proposals. None of this here is actually enforced yet. A budget is more like making a proposal to someone you love. They have the right to say yes or no. So the budget is a proposal document. The Minister of Finance went to Parliament to present the budget. Debates are currently ongoing. Parliament will have to pass laws if they agree with the 2023 national budget document. So everything here is publicly available information, except for the fact that it's scattered all over in the document, right? So this presentation seeks to bring everything together to make it easy for you to follow, really, right? And then where applicable, I would make reference to the relevant local laws as would be applicable. And final disclaimer is, whilst I can assure you that everything here is 100% accurate, 100%, right? Nothing here should be treated as representing professional tax advice, right? So please speak to your tax advisor if you want to take action on anything we discuss. The final one is all opinions, all comments are solely mine. They do not reflect the views of my employer or of any political party here in Ghana. So with disclaimers out of the way, let's start. So the budgets for 2023 really was under the theme restoring and sustaining macroeconomic stability and resilience through inclusive growth and value addition. If you ask me, a lot of grammar, long story short, we are going to tax you a lot more. That's it, right? It's just to make you feel good. That's the theme for the budget, right? So the government has plans to recover the economy. As you might be aware, Ghana is going through the hardest of times in recent history, right? We've increased our monetary policy rates to the highest since it's been since July 2003, right? We are in hard times. So this budget is supposed to allow us look into the government's mind to see what plans they have to recover the economy. So like I mentioned at the beginning, every budget has two main wings, revenue and expenditure. How much money do you expect to raise and how much of that do you expect to spend? So in terms of revenue, the government expects to raise some 144 billion Ghana cedis, approximated, right? In terms of expenditure, what you find interesting is that the government expects to spend 191 billion. This excludes arrears from previous financial years. So including arrears clearance, they expect to spend some 205 billion Ghana cedis. So clearly here we can see that right from the onset, we know that what we want to spend is more than what we plan to collect. So there is a deficit. How do we plan to finance the deficit? The government mentioned one of the plans is to get the IMF program concluded, right, amongst other domestic and external ways of closing this gap. But like I mentioned, this session is focusing on the revenue aspect. So you'd realize we won't speak on the expenditure aspect at all. If you're interested, we can run another session on that in the coming weeks. But focus is on this 143.96 billion. How does the government plan to raise this money? So our 144 billion, where is it coming from? It's going to come from four main sources: income and property taxes, domestic goods and services and international trade taxes, what I call non-tax revenue, and this is a minor bucket where we find our grants, refunds, and what the government calls others, which we don't really know the full makeup, but there are some few revenue lines in there. So in terms of income and property taxes, government expects to make close to 60 billion Ghana cedis. That's 59.8 billion. In terms of domestic goods and services, they expect to make 58.9 billion. So you can see that for the first time in quite a while, government expects to raise almost the same amount from income and property taxes and domestic goods and services taxes. And you get to know why shortly. There are lots of measures that will impact you as an individual in this session, or you as a business owner or finance manager in your company listening to me today. So the breakdown for the domestic goods and services taxes is 44.89 billion from domestic GST. For those who are not aware what goes here, this is where you find VAT, you find excise duty, you find customs duty, you find communication service tax. So you are listening to this session using your data or your TurboNet on your phone, whatever, you are paying a 5% tax on your communication, your consumption of data, right? So that also fits into this 44.89 billion. We have e-levy hidden here and a few other taxes. And the international trade taxes is simply the taxes we pay at the port. So if you go to clear your car, if you import any goods into Ghana, all the taxes you pay at the port, in terms of the duties, will fall under international trade taxes. I'd like to mention also that under domestic GST, VAT on imports, NHIL on imports, get fund levy on imports are all under domestic GST because they have an external and an internal component within that bucket. And then on tax revenue, government expects to raise 23 billion Ghana cedis, and then the refunds, grants, and others will give us 2.19 billion. So technically, 78%, close to 80% of the government's revenue target is coming from taxes. And the question is, who will pay these taxes? It's you and I, right? So the government is relying heavily on the citizenry. We've come to a point in our history as a country where 80% of our total revenue target is going to come from taxes alone. So please take note that it's you and I who will be paying these taxes. So let's not waste time. Let's go to the measures. What is the government intending to do in terms of raising these revenue amounts? So for direct taxes, before we go into the measures quickly, a reminder that in 2023, government expects to collect almost 51% more than they did in 2022. So clearly you can see that we are going to pay more taxes. No two ways about it, right? Whether at the individual level or at the corporate level, we will pay more taxes. It's a given, right? Because given the 2022 provisional R10, government expects to grow that by 51%. So just know that. And the direct tax revenue, what I would like to mention, and I think this is why I even start my recommendations, is there's a bucket called personal. Under personal, we have two categories, right? We have PAYE, which is taxes on employees. If you work in a formal institution, you have an employer who deducts tax from your salary, that's your PAYE, right? Pay as you earn. The next bucket is the self-employed. That's entrepreneurs, people who are not in the formal sector technically. What you can see here is that government expects to collect 16.5 billion from personal. Look at how much employees are paying, 15.7 billion roughly. So it means those in the informal sector, government expects to collect only almost 900 million cedis, less than a billion. So you can see there's almost a 1 to 15 plus gap right? So the burden is clearly on those who are employed. It's like the government doesn't want to do any extra work to bring in the informal sector into the tax net. And to make that matter worse, as you see shortly, those who are currently being taxed, they are going to be taxed extra. They've increased the income tax rate for employees by some extra 5%. So more taxes for those already paying the taxes, and those who are not paying, is like leave them alone, right? So I think the recommendation here, the numbers are glaring. Out of almost 17 billion, self-employed persons don't even pay a billion, right? The whole burden relies or lays solely on those who pay as you earn, or who are employees. And at the corporate level, nothing special here, except that companies are going to pay more taxes. That's another thing. So usually governments in the past would have relied on individuals to drive, right? So they'll play with VAT, play with the income tax rate at the personal level, but now they are attacking the companies too. So all companies, no matter your industry, as you find out shortly, you will be affected, you will pay tax. And don't think the previous excuse of I'm making losses will apply, because even those making losses will pay tax in 2023. So it's going to be an interesting year. So government expects to raise 32.5 billion, almost roughly twice what they expect to get from the personal level. How is this broken down? Taxes from oil alone at the corporate level will be almost 8.6 billion. And then all other companies will bring us almost 24 billion cedis. And the others, we have 10.74 billion. What goes here? Royalties from oil. So oil companies have to pay government royalty, right? This will give us almost 4 billion. Then mining companies will pay mineral royalties, almost 2.6 billion. Then the National Fiscal Stabilization Levy, which, as we'll find out shortly, has been redesigned and reintroduced. I like to call it in a pro-max style, will bring us 2.2 billion. Then the Financial Sector Recovery Levy, which they introduced to help clean up our financial sector from the banking collapse we had and all of that, will bring us almost 380 million. The question is, do we still need this tax? Are they not done cleaning up, right? But banks are still being burdened more than ever. Then there's airport tax of almost 900 million Ghana cedis. Then there's a small bucket for others, which is almost 600 million Ghana cedis, right? So let's zoom straight into the revenues. With all these numbers, how do they plan to achieve this? The first thing they want to do is to review the upper limit for motor vehicles. What does this mean? If you are an employee and your employer gives you some allowance in terms of fuel, or they give you a company car, or they give you a company driver, right? The law provides a way by which we must tax this. No, so for those who get the benefits in kind, if you are given cash, the whole amount is taxable. No arguments about that. So if your employer gives you 1,000 every month and they give you physical cash, it hits your bank account, that whole amount is taxable. But if your employer gives you a fuel voucher, a fuel card, or they give you a company car, right? There's a way to value it. Currently, as it stands, if your company gives you a company driver, a company car, and they give you fuel, the amount is capped at 600 cedis every month. So for those who were given huge Land Cruisers, got a company driver, got free fuel, they were only paying tax on 600 cedis, right? So you can see here that there was a benefit on the individual side. Government has said, well, they are not going to tolerate that again. You must pay your fair share. So they are going to review the upper limit of this particular amount. And my expectation is that this will be in line with current fuel prices, right? So maybe are they going to double this? Nobody knows, right? But the expectation really is like they want to review the upper limit of the motor vehicle benefit. So this will apply to everybody who's an employee who is given either fuel by the company or a car or a company driver. In some way, shape, or form, you will be affected by this. And through this, they should be able to rope in some extra revenue from the increased threshold that, right? This will apply to you. The government is going to reintroduce what we call the top 35% tax band. Now, it might interest you to know that this rate actually was introduced in August 2018. 2018. In the 2018 rate, and instead brought in a 30% rate above the current 25% that we had at that time. Now, the government has gone back to the drawing board and said, see, at this point, I don't care if they fight back. I need money. So for a government that withdrew a tax everybody pushed against, they've come back to say, well, I don't care what you think. I am bringing the 35% rates back. So if you're an employee here and you are a high earner, I don't know what the magic number will be, but currently, if you earn 20,000 cedis plus, you are in the 30% band. The question is, who will the 35% apply to? We don't know the numbers yet, but there will be a certain portion of tax that will be at 35%. For a low-income earner, you really don't have too much to worry about because this is a progressive tax, right? The higher you earn, the more you pay, right? But if you're a high-income earner or if you're a sole proprietor and your business does so well in terms of profit, you will definitely enter the 35% band. So here, we will see the wealthy or the high-income, I don't even call them wealthy, right? Ghana is hard for everybody now. So we'll see the high-income earners end up pay more in income taxes. The question is this the right move at this time? If you ask us here at TaxLawGH, the answer is no, because you are increasing VAT as you find out shortly, right? The tax burden is too much to add an extra layer on those who are already compliant. So take note here, the government will increase the tax rate. What we expect to happen is a bill will be laid before Parliament before end of this year. And in addition to this amendment, if you were listening or you were following our pages closely, you realize the government also increased the national daily minimum wage, right? So we expect the nil or the 0% tax band to increase from the current 365 cedis per month to some 402 cedis effective January next year, right? So take note, more taxes at the individual level. Then the next is gains on realization. We'll see a framework review. What does this mean? If you have assets that you realize or that you sell, and you make a gain on those assets, the law expects you to pay taxes and file a return. The current regime as it stays is a self-assessment one. So if you have a very luxury house in East Legon and you sell to somebody and make a profit or a gain of 2 million cedis on that sale, if you don't go and report yourself to the GRA, if you don't go and self-declare, they never know about it, right? The government is saying they are planning to introduce a withholding tax mechanism so that they don't wait for you to come and self-declare, but the person upon making payment to you will withhold some tax, right? At this point, nobody knows what the tax rate will be. There is a current rate in the law which allows an individual to opt for a 15% rate. So if you make a gain, you can elect to do 15% instead of adding it to your total gain and paying 35%, right? The government says they're going to revise that 15% rate. Most likely, for a revenue-seeking government, the expectation is that this rate will be revised upwards, right? So the question here is, do you think for a tax people were not already paying, increasing the rate to make them pay, right? So question 2 is, do we have the systems and structures in place to know when somebody has made a sale? Go to the US, and once you sell your property, there's a system in place to know you have made a sale, and they'll collect their tax at the point of making the sale. Is Ghana there yet? Will this be another law that is just on paper and no enforcement? Let's see how it goes. But take note, the framework for realization of assets and liabilities will see a revision, all in the hopes of increasing tax revenue. The next is the concessionary, some cases 7 years for those doing recycling, right? You pay just 1% of your chargeable income as tax. The government says no, I'm increasing that to 5%. So even those in special industries, even those the government plan to give them a light burden and make them enjoy some concession so that their business could pick up and contribute to the economy, even they are going to pay 5% instead of 1%. The question is this the right move? Is it an incentive for people who are already in industries that are not too profitable? The question is, this is a government desperate to raise taxes by all means, and they will do whatever possible it takes. What we don't know here Yet, it's if the young entrepreneurs regime would be affected by this. But until the bills are passed by Parliament, we can't really tell. But take note, if you're in a concessionary industry, your 1% no longer applies. You will now be paying 5%. This is where it gets interesting. So government plans to introduce something called a minimum chargeable income system. Here they are saying that we've observed as GRA that some people never pay tax, and their excuse is that we are loss making, or our business is not going on well, or the economy is hard, so I'm declaring losses. They are saying that now we don't care if you are making losses. We are going to set a minimum chargeable income for everybody. So whether or not you are making losses, there is a certain minimum chargeable income you must pay a tax on. Some countries have this in operation. Some East African countries have a 1% professional tax that you pay at the corporate level. So whether or not you are making profits, give us our 1% turnover tax. What we don't know yet is if this will take the form of a turnover tax, right? And do not be too quick to think this will only apply to companies, because the budget said minimum chargeable income, and chargeable income applies to individuals and companies alike, right? So what we're expecting is that if you live a very lavish lifestyle on social media, if you've never paid a tax, the expectation here is that GRA should be able to go to your Instagram pages, look through your pictures and say, how come you have all of these luxury cars and we've never seen your tax return? Based on what we see, your minimum chargeable income should be X amount and come and pay us this amount in taxes. So take note, we will have a minimum chargeable income system where you can't live a lavish lifestyle and say you don't have money, right? So your lifestyle must match your tax returns. Your business branding on social media must match how much you pay, right? Nobody can hide under the guise of accounting losses and trying to cook your books to have a very unfavorable position. So take note, we will have a minimum chargeable income system. Then another one which we don't think was too necessary is the loss carry forward review. What is going to happen here? Currently, the regime is that businesses in priority sectors like energy and power, ICT, manufacturing, mining, oil and gas, all of those specialized industries are able to carry forward their losses for 5 years. What this means is that if you make a loss, you can carry forward for the next 5 years until you make profits to offset those losses. Government is saying that for those who are in the priority sector who are 5 years, let me also add, there is the general regime for all other businesses who are allowed to carry forward their losses for 3 years. Government is going to unify these two, right? So the question is, would they make everybody do 3 years carry forward? Or will everybody do 5 years carry forward? Or would they find the middle ground and say, okay, let's find the average, everybody should do 4 years? But no matter what the case may be, the expectation is that we will unify the 3 and 5 years, and there will be one number of years. If you ask us here, the 5 years for those in the specialized industry should not be touched. There are many entities that come into Ghana to explore oil or to mine because of these incentives. If you cut down their 5 years to 3 years, what really is their incentive to continue operating here? So we should be careful how this may drive away foreign direct investment, right? Just to mention. The next is a review of the foreign exchange law. This will apply to a company. What this currently means is that you are able to deduct your real losses as well as your unrealized losses. But can you hear me now? It's clear now. Is it clear now? Okay. So unrealized losses will now be non-deductible, right? Then if you make a realized loss on capitalized as on assets, these will be capitalized as part of your asset pool for the period. So here it's really a measure to block the deduction of unrealized losses. The impact for companies will be essentially that if you have a huge unrealized loss figure in your books, this should no longer be deductible, and this will reflect in a higher corporate tax payable for you as a company. The next, which will interest those who are interested in sports betting, is that there will be a gaming and betting tax, right? So if you are involved in sports betting, the expectation here is that you will pay taxes on your betting in one way or the other. The government proposes to do it in two ways. The first is to tax gross gaming revenue. So for the betting companies themselves, right, they will be taxed on their gross revenue, and this will replace any corporate taxes they pay and any VAT they pay. Then for those who win, so let's say you go and stake a bet on any ongoing World Cup match. If this policy is implemented, before the betting company pays you your winnings, the betting company will deduct a withholding tax and pay to the GRA on your behalf, right? So your winnings from betting will reduce by the withholding tax amount. What we expect is that this should be at some 5%, as it was in a repealed law we've had. But should they decide to do more than 5%, the question is, will the young men in Ghana still choose to engage in sports betting? We will see this subsequent. The next is the vehicle income tax. So for this, if you observe, anytime you sit in a public transport, a trotro, a taxi, you see a sticker on the windscreen, right? And you see VIT written on it. These stickers are meant to represent taxes paid by these drivers on a quarterly basis. As it stands, some people pay as low as 40 cedis for the entire quarter. This is very low. The government says they're going to revise these rates because these rates have been in force before 2014, right? And even in the current income tax regulations, the rates are still low. So we've not seen an amendment for close to a decade now. The government plans to revise these rates upwards. And the question is, will the drivers, depending on how significant the rates are, will the drivers choose to increase transport fares again because of this? If the answer is yes, and this would be a counterproductive measure because inflation is high, people are already paying high costs in transportation. Are you going to burden them any further? But we do not expect the drivers to impose this extra burden on passengers because they are making more than they're already paying. Rent tax will see enforced compliance. What does this mean? It doesn't mean you as an individual, your landlord will start taxing you, no. But the expectation is that we have a regime in force. It's not a new tax, right? We have a regime in place already that seeks to take withholding tax on rent payments. The GRA says they're going to look down carefully and ensure this is fully enforced. So if you have a rented property, either commercial or residential, the GRA will come up with guidelines or a procedure to ensure that everybody pays their fair share of rent taxes. In terms of tier 3 withdrawals, currently, if you're in the formal sector, if you withdraw your tier 3 provident fund benefit before 10 years, you pay a tax of 15% on exit. If you're in the informal sector, your personal savings account, when you withdraw before 5 years, you pay a tax of 15%. The government is saying that this is to relieve the burden on people, right? So if you're able to prove that you've lost your job or you've lost your capital in 2023, right, as a result of the hardships going on, if you decide to withdraw your tier 3 funds, this will be exempt from the 15% tax. So far you can see that this is the only benefits that we are getting really, right? If you are suffering, you are struggling, and you decide to withdraw from your tier 3, you can prove that you lost your job. This was introduced in 2021 when we had the COVID pandemic, right? So this government repeating something is already done. This is a benefit for those who might do withdrawals. Then what will burden every single company, in addition to the minimum chargeable income, is something I mentioned earlier, the National Fiscal Stabilization Levy, which is currently 5% of the profit before tax on certain entities. So currently, if you're an insurance company, if you're a financial institution, if you're a telco, if you're a brewery, if you're a mining support service, if you're a shipping line, if you are an inspection and valuation company, you pay 5% of your profit before tax. This is your accounting estimate, right? To the government as National Fiscal Stabilization Levy. The government is saying that, well, and it's funny, right? Because this was supposed to be a temporary tax. It was introduced by the former government. It's actually started in, I think, 2008. They had 2009, 2008, had a gap year in 2012. Then the government said, okay, it's a temporary tax, will end at some point. From 2012 to date, the government keeps extending. The current Act 1011 that has been passed by Parliament proposes that this will end in 2024. But for us to know the government will not end it, if you check the appendix in this budget, the government has projections up to 2026. So if you ask me, this is no longer going to end. It's back, bigger, better, and stronger. And they've even changed the name to Growth and Sustainability Levy. So if you're a company, please plan that you pay NFSL. Now, remember I mentioned the list of companies that were paying the levy, right? The government says now everybody will pay. Every single person will pay. So as long as you are making profit at the accounting level, right, you will pay this levy. How will this work? We'll have it in three categories: category A, B, and then C. The category A guys are those who are already paying, so they are not going to change. Government says it's going to add 6 additional industries, and they will all pay at 5%. Nobody knows what these additional industries will be. We just know they're going to be 6. Category B will be every other company except those in the extractive sector. That's the mining, oil, and gas industry. So category B is your guy who has a company at Circle. He sells laptops, right? Even he, if he's making profit before tax at the accounting level, he will pay this NFSL, but not at 5%, at 2.5%. So this is a way, remember, that person is going to pay minimum tax already, right? That person, if it's an individual, is paying the 35% tax already, right? They can't deduct the unrealized loss. And now they have to pay 2.5% taxes. So if you realize, company income tax is almost as equal as the personal income tax, right? So you can see the burden here. Then those in the extractive sector will pay 1% of their gross production as growth and sustainability levy. So the question here is, in such a hard time, is it fair to impose this on already struggling businesses? And don't forget that for banks, the question really is, they are paying 25% corporate tax. They are paying 5% financial sector cleanup levy. They are paying 5%, is now called GSL, right? Formerly NFSL. Are you not eroding the profitability of shareholders? Right? Banks are very profitable in Ghana, yes, but we feel the burden lies too much on many. The government, according to the budget, says it's supposed to share the burden, right? So that everybody pays. But if you ask us, small and struggling businesses should not be made to struggle a lot more, because don't forget that businesses will end up pushing this cost back to you and I as consumers, right? So government will end up realizing their revenue target, but with increased cost, inflation will keep driving through the roof, right? So they should proceed with caution. If you ask us, oil and gas companies are rich, they can pay. They pay 35% corporate tax, so 1% extra is fine. But for all other small businesses, government should proceed with caution. Then this is also for those in the upstream oil and gas industry. Government plans to recover something called additional oil entitlement. So how does this work? Basically, if you make a return above a certain internal rate of return, above a certain IRR, right? What the government will do is to collect extra oil from you or extra return. This is more like a windfall tax, right? Government says it's going to pursue additional AOE from those operating in the Jubilee field. So I think for majority of us on this call, it won't apply to us. It's none of our business. But it's another way the government is aggressively trying to expand their tax net. So you can see here that from a direct tax perspective, there's a lot going to happen next year. I think we haven't had a time where direct tax alone has had this many changes. In prior budgets, we could have just 4 changes in total, sometimes 7, right? But this year alone, we can see direct tax alone is going to have all of these changes. So let's take note accordingly. Let's move to the indirect tax measures the government plans to roll out. For indirect tax, government plans to raise 58.9 billion, right? Remember, direct tax were around 59 billion thereabout. So close to the same amount in indirect taxes. Where will the money come from? Excise taxes will bring us 6.3 billion. DST, like I mentioned, communication service tax, the tax you pay on your DSTV, your Twitter browsing, you listen to the session, currently at 5%, that's almost 800 million Ghana cedis. The National Health Insurance Levy, Get Fund Levy, COVID-19 levy will bring us almost 12 billion. The question is, do we still need the COVID-19 levy, right? I mean, COVID died in 2021, right? But we are still paying for a levy supposed to help us recover from COVID. And the government still tells us that they are still recovering from COVID, right? So which is which? I think the COVID levy, it's time it dies permanently. VAT itself will bring us close to 24 billion Ghana cedis. Then e-levy, the one nobody likes to pay, will bring us close to 2.2 billion Ghana cedis. Then import taxes at the port, 14 billion. So please prepare to pay more taxes when you import goods at the port, because that alone is bringing us 14 billion. Government plans to increase its collections from last year, or its target, by almost 50%, right? So the expectation here is that indirect taxes will grow by 50%. What are the revenue measures government plans to implement to get this enforced? The first is that the VAT rate will be increased from 12.5% to 15%. Don't forget that VAT is a big contributor to our current inflationary rules. We had retailers and formerly wholesalers, right, who were required to charge 3% for the VAT flat rate scheme, all now applying standard of 19.25%. Government is saying that is not enough. They are going to increase the VAT rate again by an extra 2.5 percentage points, right? What this will mean is that for all of us, if you walk into any mall to buy any good, if you buy any good from any wholesaler, any retailer, instead of paying 19.25 currently, you pay 21.9%. So the complaining that everybody's complaining about the price of goods being high, it's not about to end anytime soon. Prices will go up again. Because don't forget that when VAT goes up, for businesses that face inelastic demand, they will shift these costs back to you, right? So the inflation that we currently have around 40% plus, I expect this to increase again based on this VAT change. VAT has a very direct impact on inflation. There are various research studies that have proven this, but I think our government is not aware, and they keep increasing VAT anytime they want to increase revenue. As if this is not enough, they want to review the VAT threshold. So currently, if you make 200,000 cedis in revenue over a year, they're required to register, right? And those who are retailers who make in excess of 500,000 cedis must apply the standard rate, which is what they are increasing to 15%. The government plans to revise this threshold. What we're expecting is that they will do this to bring a lot more people into the VAT net so they can collect more taxes, right? The next is that the VAT exemptions will be reviewed. So government says they feel they are giving too many exemptions in terms of VAT, so they might remove some items from the exempt list, right? So some things that were formerly not attracting VAT will begin to attract VAT. So this is more taxes for us to pay. And VAT, you can't dodge. If you buy a bottle of water, you've already paid VAT because the price they sell to you has VAT. If you buy an iPhone, there's VAT in it already. Because when they imported to Ghana, they paid VAT at the port, right? Every single person pays VAT. You can't dodge that tax, right? Whatever you buy, sanitary pads, everything you buy, there's VAT, right? Except a few exempt items like pharmaceuticals. If you go and buy Panadol from the pharmacy, there's no VAT. But majority of the things you buy, your Coca-Cola, your Fanta, your Sprite, they all have VAT, right? So take note, the exempt items will be revised. What it is, we don't know yet, but definitely we'll pay VAT on additional items. Then next is that if you smoke cigarette and tobacco products, the excise duty on these will be revised or to be reviewed to be in line with ECOWAS protocols. If you ask us, in as much as this might result in some extra taxes, this is a good measure because it's okay. We are in the ECOWAS region, right? We should have our rates aligned with any applicable sub-regional regimes that exist. So this, take note, will be done. Then if you drink alcohol, government plans to revise the excise duty rate for spirits to be above that of beer. Currently, any alcoholic drink that is not beer, your excise duty rate is between 10% to 25% of the ex-factory price, right? Beer has a rate of 47.5%. Government says no, the spirits cannot remain at 25%, so they must be higher than beer. So expect the price of spirits to be technically either equal to or more expensive than beer, depending on what you drink. I don't drink, so I don't know the prices, but all this will mean for those who drink is you would end up finding spirits technically becoming more expensive than beer, right? If they already are not, I don't know. right? So that's it. If you are drinking, you will pay more for your drinking habits. Technically, those who believe in excise duty being a sin tax, this is supposed to reduce or discourage consumption. But somebody who will drink will still drink anyways, right? So this will end up giving government more revenue. Then for products that are subject to excise duty, government intends to expand this. So I'm sure you know there are electronic cigars, right? Electronic cigarettes. Currently, they are not taxable. Government says no, they will include those also in the taxable base. Then liquids that are not taxed, I don't know what they're referring to here, because currently water is already excisable, that's pure water, right? I mean, pure water is not excisable, but bottled water and the rest are. So here, really, government says all liquids that are untaxed will be taxed. So the question is, I don't know, are they referring to like sachet water, right? And the like. So let's see what the government intends to do in this regard. So they will include a lot more liquids that are not taxed in the tax base. We end up paying more taxes on our goods we buy. Then this will affect everybody who imports, right? Currently at the port, we have something called the benchmark value discount policy. What this means is that before this policy was introduced by the government, I think sometime in 2019, what this was supposed to mean was instead of using the transaction value, which is how much the item actually costs, they had a benchmark value. And that benchmark value was given a discount, right? So the base on which we are applying the customs duties was further reduced back then. Government reviewed the discounts further downwards, and they are saying from 2023, there will be no discount. They are going back to transaction value. So it means everybody complaining that cars are already expensive, they will become more expensive next year because the base on which the duties will be applied will be increased. There will not be any discount. So please get ready to pay more for your cars. Cost of cars will go up. No one can afford. I mean, the rich can afford anyways, right? But all other items you import from the port or at the port will see an increase in customs duties and all the associated port taxes. Then for currently, if you want to clear goods, you probably need to use someone called a customs house agent. The government says they are going to allow you to self-clear your goods, and they'll have to amend a certain law, the customs regulations, to allow for this. What does this mean and why are they doing this? This is their own way to find out that people are compliant, right? Because if you have to self-clear, you need to submit a tax clearance certificate. So if you're not paying your taxes, you can't clear your goods, right? So this is the way for the government to ensure that more people can self-clear, but at the same time, they want to use this to rope a lot more people into the tax net. Because if you can't clear your goods and you need a TCC, you'd have to pay your taxes first, right? So that's it. The next is something called the HS code. The rates you pay on things you import are not arbitrary. They are set by a certain document called the CET, or the Customs or the Common External Tariff. Now, every 5 years, the CET must be reviewed. The current CET we are using in Ghana is the 2017 CET. If you count, it's 5 years now, right? So the government is saying that they would implement the 2022 CET next year. Parliament has to pass a law to authorize the CET for 2022 to become a schedule to the Customs Act, Act 891, right? So what this means is that I don't expect this to reflect in terms of higher rates, but we will have more items being roped into the net because usually new CET schedules introduce or include additional items that were probably not envisaged 5 years ago. So this is just for those who are into importing. I think technically we should see an increase in port charges and different other costs we have at the port. This is not too important to all of us here, but there will be ECOWAS supplementary protection measures in two forms: an import adjustment tax and a protection tax under the CET. This will revise the CET, the duty rate for locally manufactured goods that can be manufactured in sufficient quantity, right? And won't apply too much to you. What I think everybody is not happy about is the e-levy. The question is, if you look at everything they've decided to impose, why couldn't they just scrap the e-levy? Because the excuse last year was e-levy will prevent plenty taxes, will solve all our problems. But now you bring additional taxes, you want to tax everybody, and you still have e-levy. What they did to make you think they did something was they cut the rates down from 1.5% to 1%. But what they did, and what you probably did not know, or if you've not heard this, they've taken away the 100 cedis threshold, a daily threshold. No, if you send 2 cedis, you pay 11. 5 cedis, you pay 11. No matter how much you send, you pay 11. What they said in the budget that the media is not making noise about yet is that some exclusions will also be taken away. Currently, there are some transactions that are not subject to e-levy. For example, I think interbank transfers are subject to a 20,000 Ghana CD cap. Will it be possible that this 20,000 cap will be taken away? We don't know. But government says they'll review some exclusion. So take note, transactions that currently don't attract e-levy would also be brought into the e-levy bucket. So expect to have this tax around for quite some time. In terms of general tax admin measures, the first they plan to do is to introduce electronic TCCs. This will not amount to you paying more taxes technically, right? What this will lead to is that now you don't have to go to the GRA for them to write a TCC for you on a piece of paper, right? What this will mean is that electronically, you can do this on the GRA online portal. The government also says to expand the TCC to cover extend additional services. Currently, you can't register a land in Ghana without a TCC. So if you have money, you save all your money, you don't pay taxes, and you go and buy a land and go to the lands registry to register your land, you need a TCC. So the government knows that if you don't have a TCC, you can't register your land, you can't import goods, and a few other things you can't do. Government plans to expand the scope. So would they add banking to it? We don't know. If they add, you can't operate banking service without a TCC, then everybody will be forced to get a TCC, and then everyone will be forced to comply, right? So this is their own way to ensure that those who are hiding will come out and would have to pay their fair share of taxes. Government also said they are going to freeze tax waivers for foreign companies. If you ask me, this was quite unnecessary because we've had the Exemptions Act of 2022, Act 1083 passed last year. It's already in force from September last year. So this was quite a waste of space in the budget. But then again, they said they'll freeze waiver of taxes for foreign companies. For free zone companies, they still mentioned again that they will review the exemptions. If you ask me once again, the Exemptions Act is meant to unify all exemptions provisions in our law. So really, do we need this provision? But let's see how they plan to roll this out. Still under the extractives, they are saying for mining and oil and gas companies, they will not have any exemptions. What we are thinking is that these companies benefit from special concessions in the VAT Customs Act and their petroleum agreements. Can the government touch a petroleum agreement? It's difficult because there's something called a stability clause. Stability clauses provide or protect petroleum companies from any tax changes that are unfavorable, right? So what would the government do to accomplish this? No one knows, but they are saying that they're going to cut down the reliefs that these companies get in 2023. This is not relevant for you, but at the governmental level, they are going to implement something called automatic exchange of information. It's already in the model tax conversions, right? They are saying here they are going to enforce it, ratify documents that have to be ratified, improve compliance monitoring and all of that, and ensure banks send foreign account tax information to relevant multinationals or government agencies. So this will be something to ensure that government on its own part complies with its provisions or its obligations in double tax treaties they have signed. Now on textiles, excise taxes on textiles to be enforced next year. So if you buy a piece of cloth, right, you should expect to see some excise taxes imposed, right? With the tax stamp meant to ensure that we don't smuggle goods, we don't dodge the excise, and people pay the fair share of taxes. So really, it's more of an enforcement mechanism, not really going to raise extra revenue, except for those who are smuggling. They need to get a stamp, and to get a stamp, they must pay the excise duty, right? So this will indirectly bring government some revenue. Then the government is saying also that the Revenue Assurance and Compliance Enforcement Unit would undergo an assurance exercise. Here's mainly to ensure that VAT and customs processes on imported goods are up to scratch, right? Are doing the right thing. Then property rate. This has been mentioned in every single budget. So I don't want to raise my hopes here. They are saying the Unified Common Platform has been piloted, will be rolled out to MMDAs and property owners in January next year. We have had property rate taxation in almost every single budget in the past 5 years. The question is, will they have the political will to enforce? If you ask me, property taxes alone can solve a lot of our problems, not e-levy. Because go to cantonments, go to East Legon, go to all the luxury areas in Accra, look at all the properties there, value them, apply a rate on them. That's a lot of money, right? But the question is, who owns these properties, and would they be willing to pay taxes themselves, right? So it's about the political will. So let's see if they can do this next year. What will shock you is that road tolls are coming back. Remember, government removed road tolls and said, oh, don't worry, no more road tolls, pay e-levy instead. No, road tolls are back, but according to government, it will be on selected public roads and highways, right? But if road tolls are back, then why do we still have e-levy, right? Because e-levy came to replace road tolls. But if you brought road tolls back and you still have e-levy, then did you just trick us to only bring the tax back? Like, nobody really knows what's going on here. But road tolls are back. Expect to see the toll booth set up again on our major roads, and you will pay your tolls as you used to. EVAT has been rolled out. Government says by 2024, everybody will be under the scheme. So if you remember, a number of shopping malls were attacked, Palace, China Mall, and the like, right? I'm sure you go to the mall, you see GRA officials sitting in front, writing your receipts on a piece of paper. They were doing the exercise, kind of find out the gaps between the VAT they were charging and what they were declaring. So they are fully on EVAT now. If you go to the mall and you watch their PC, you see the GRA portal has been interfaced with theirs. They are saying now that by end of 2024, everybody in Ghana will be doing EVAT, right? This will ensure that those who are not declaring the right amount of VAT will do so, because this system gives GRA live access or live feed into your sales activity. So I think it's a good measure so no one defrauds the government. So in terms of this budget, if you ask me, it's a budget that is going to burden a lot of people, right? So the question really here is that, is this the right time to introduce these numerous measures? Remember, we are going through the hardest of times. Interest rates are through the roof. Inflation is through the roof. Our currency is currently, if not the worst, the second to worst performing currency in the world. I think only second to Sri Lanka, right? So with a struggling economy, is this the right time to introduce these measures? But then again, somebody will say, you never know what the IMF has told government to do. For an IMF program to be successful, you need to prove that you have the room to raise some revenue yourself. So maybe this is the government trying to be or use desperate measures to get back on its feet. So really, it's going to be a tough year next year. We have a lot of taxes to pay. And if you're a business owner, you have a lot more compliance to do now, right? So cost of compliance will go up. And the question really is this the right time? So this is a summary of our budget for 2023. If you're on social media, I mean, feel free to shoot a follow. We are very active on Twitter, LinkedIn, Facebook, Instagram. Follow our pages and let's interact some more. So at this point, I will pause and more than happy to take any questions we may have. So you can raise your hand first, and then I'll let you ask a question. Any question? Okay, Kofi Bedu, please go on.
Good morning to everyone. Please, sir, please, can you explain the concessionary rates review? I didn't seem to get what you said.
Okay, so there are certain people in specialized industries, right? And they enjoy some benefits. What this means is that those benefits in terms of rates will be reviewed. I'll give you an example. So for example, if you are a business and you are engaged in, let's say, agro processing, for instance, right? The law has a provision for you in terms of how much you pay by way of taxes, right? You have a 1% rate for a period of time, 5 years. Government is saying that 1% will increase to 5%. If you're into cattle farming, for instance, government says that your first 10 years, don't pay me any tax, just pay me 1%. Government is saying that 1% will increase to 5%. So it's really more taxes for those in specialized concessionary industries.
Okay, thank you very much.
Okay, sure. Any other question? Who's that? The University Times. Sure, go on. That's the name I see here.
Okay, so the concessionary tax, will it be on the, let's say for the cattle farmer, would it be on its revenue or any other thing?
these are usually profit taxes, so they'll be on your chargeable income, not like your revenue, after you've deducted all your expenses, really.
Okay.
Do we have any other question? Richmond Anane.
All right. Thank you for this overview. Very, very succinct. But so mine is not really, I don't know whether I should call it a question or it's just something I want to bring up for discussion. Well, it has got to do with the the GRA in itself. Some of their procedures that they adopt in doing their work. I'll focus largely on the withholding tax regime, right? So there are times, when they deploy the tax portal platform, we were made. They came up with this whole idea that if you are filing your tax returns, especially around withholding, and then you don't input the right TIN number or the Ghana card number, the portal would reject it. But I've realized that for some time now, that is not so. There are times where you're able to file your tax returns and then you input the wrong PIN number or TIN number or the Ghana card number, and the system goes ahead to process that, and then they take, because I'm looking at it and how it relates to other because if the system is done such that say I file your tax returns, I withhold tax from you and I pay on your account, you should be able to go into your own account such that at the end of the day the GRA's analytics system should be able to highlight for some people who are earning from other sources, maybe they are employees. For instance, those of us in the professional field, lawyers, doctors, accountants, and all that, we all have our day job that we do, but there are sometimes we do other jobs from other areas, and then for some of those clients, they withhold taxes from us. But in this case, the GRA system is not able to follow through some of these professionals to mop up the other taxes that they are supposed to pay. So that's why I was saying that with mine, I don't know whether it's a question or it's something that I just wanted us to openly look at. I know the government is looking at getting more from the low-hanging fruits, but I feel like one of the low-hanging fruits too was compliance and doing better with the withholding tax regime. But I was expecting to see more with that, to see how government is looking at tightening that regime, but I didn't see much.
Okay, so I think that will fall under
on the budget. So that's my
yeah.
take.
So I think for the government, right, they agreed that our systems could get better, right? We should be proud of ourselves that as a country we've moved away from paper filing for quite a while now, right? Ever since income taxes were introduced in Ghana, we've been filing on paper. We've made a move to e-filing. I think the COVID pandemic showed us the need to do this because we realized that we couldn't keep going to GRA offices under lockdown. So at least the pandemic had a good result. If you ask me, the system is not a perfect one. It's working, but it's not perfect. So yes, there are challenges in a perfectly functioning system. We shouldn't even apply for PPCs, right? Because if you've paid your taxes and you use your Ghana card number, if you're an individual, I was getting feedback from you. Yeah. So if you're an individual in your Ghana card, the expectation is that your records at GRA will show the tax you've paid. So all things are live, automated, and we don't even need to apply for TCCs. But I think it's a matter of time. We'll get there, right? Gradually, we are getting better. But yes, I agree, there are lapses in the system that need to be corrected. Any other question? We can take like 2 more questions. Okay, I see Yara from home.
Yeah, good morning to everyone. I'm still trying to understand how the withholding tax on gains will be affected, because how would the person paying know that I've made a gain on realization? I don't know if you could clarify.
Yeah, I think that's a good question, because really and truly, with the kind of record system we have in Ghana, it's true. Like, so here we'd have to wait for the GRA's guidelines on how they plan to proceed with this. Because technically, right, like you rightly said, there is no way to know the gain amount. What you would know at the point of transaction is how much the consideration is or the transaction amount. You can't tell what the cost was, and there's this rollover relief benefit. How can you even know that it's not been triggered before, right? So yeah, we would need further clarity from the GRA on this. Like I was saying earlier, we don't expect this to become another law in our books, which will not end up being enforced, right? But yeah, you're right. We need clear guidance on how this will be done. Then again, if we had a perfect system like in the developed countries, all of these things are in the system somewhere. Once you trigger a sale, like the cost is there already. How much you are selling for is there already. Once it hits your bank account, you know that a sale has been made, right? So the tax at the point of sale. But in Ghana, we need to do some extra paperwork. So let's see how the government will proceed with this. But it's not clear in the budget. Yeah. Derek, Atta?
So, thank you for the opportunity. You are saying that with regards to foreign exchange loss, the treatment, you said unrealized losses will not be deductible, but realized losses will be capitalized. Realized losses on assets will be capitalized, right?
Yep.
If I heard you clear. Yeah, so how would the capitalization be done? And with respect to that, would that be assigned to a pool that capital allowance will be generated from that? I don't really know about that.
Okay. This is a good question. You know your stuff. So in our old, I don't know if you were tracking, but in the repealed Internal Revenue Act 2005-92, right, there was a similar provision for capitalization of losses on capital assets. Back then, there was a special 10% pool, right? We don't know if the government will go back to that treatment. But at the end of the day, yes, whatever the treatment will be, that loss will be added to the cost, capitalized together in a pool. We don't know which pool yet, right? And then granted capital allowance. So like I mentioned, at 592 had a certain treatment. We don't know if they'll go back to that. But yes, that's it. That's what it's going to be for assets. For unrealized losses deductibility, the portion of your FX losses that have not been realized, that have not crystallized, you can't deduct them like you currently do. So you have to add them back, right? And by adding them back, your tax base will increase. Your chargeable income will increase. And if you are chargeable income positive, you end up paying higher taxes, right? So that's the explanation, if it clarifies for you.
Sure. And one more thing. Looking at the fact that unrealized losses will not be deductible. To me, the timing is inappropriate because looking at the fact that the country's currency is the worst performing, yeah, I think second worst performing currency, and we expect that foreign exchange losses will be higher for companies. I mean, at least for the coming year, and there had not be any relief for these companies because if they are to hold maybe they are to hold receivables in foreign currency, I think they will lose. So I don't know if the government should actually revise this policy because it seems it's going to affect them in a much deeper way. Yes, and because if you are not going to deduct unrealized losses, well, the losses and more to even your income is already being burdened with a lot of tax, and the little opportunity you get to actually lower your tax, your tax amount is actually being reduced. So I think businesses are going to suffer. They are going to suffer. Yeah.
Yeah, I mean, I agree with your final sentence. Businesses are going to suffer. And it's true. You know, this is a government that has seen, they're like, okay, listen, the currency is depreciating. Until we save it, there will be lots of FX losses. Why don't we just take the unrealized portion and get some tax from it? So they are benefiting from misfortune, right? It's going to burden companies because remember I said these same companies will pay minimum tax. They will pay a new growth and sustainability levy. And now the FX losses they can't deduct. So it's like burdening you left, right, center, right? But yeah, it's going to burden companies a lot more. And like I said, these burdens will end up coming down to you, the consumer, when you buy goods and services. So really, at the end of the day, inflation will get worse, and I don't know. They will get their revenue, yes, but the trickle down effect is the question. So yeah, you are right.
So
Unrealized losses will be the highest during this period, but yeah, they want to benefit from it.
yeah, so
Okay.
the move by the government to actually restrict companies to price their goods in local currency, do you think that will be realistically achieved? Because I mean, if they are to quote their service or their goods and services in local currency, they are going to suffer. They get it. So I don't think it's in line with with their moral situation or with their encouragement of businesses to quote their goods and services in local currency. They get it because people think that the dollar is somehow stable. And quoting your prices in dollars, you actually be cautioned against foreign exchange loss. And the government want them to do it in Ghana cities. And here's the case that you are reviewing the unrealized losses on FX to be non deductible. Do you think it's a good move and it aligns with government objective?
As to if it's a good move or not, it's not for us to determine. What we can determine here is that it's going to burden the citizenry, both at a corporate level and on the individual level. The BOG has posted several notices asking people to not price in dollars, except they have a clear dispensation or approval from the BOG to do that. But are we complying? No. You walk around town and you see a billboard boldly with the price of the apartment in dollars. Like, they are so bold to put on a bill, but then nobody's going after them. Nobody, right? So we have a system. We have a central bank that is posting notices, sending letters all around that don't price in dollars. But the citizens are like, no, I want to only price online. I'll price on billboards and you can't do anything to me, right? So I think really at the end of the day, it's a system where nothing really works. And I don't know how this will turn out. But yeah, it's going to be an interesting year next year. You can't stop them from pricing in dollars, even though your law says you can't do that, right? So I think BOG should crack down on that provision first, right? And I think that should get us back to some stability in terms of the FX fluctuation. But until then, it's an open jungle for everybody. All right, any other question? I can take 3 more questions. 3. I see one by Somawuda. I hope I got your name right.
Yeah, hello. We'll take it as such.
Oh, okay. Sorry if I got your name wrong.
Oh, no problem. Thank you. So my question is basically on VAT. I know there are some goods that are VAT exempt, like medical supplies and other medical equipment that are used for medical services. So, and I understand that since such goods are VAT exempt, the levies need not to be paid on them. So, say a supplier is to present a VAT invoice with the levies and the VAT calculated on such medical supplies. Is one obliged to pay the levies or the VAT on such goods?
Okay, good question. So I like to say that VAT and the NHIL Get Fund COVID-19 levy, they're like Liverpool, right? They never walk alone. So if VAT is exempt, the levies are exempt. If VAT is zero rated, the levies are zero rated. So they go together. You never find someone paying levies on a VAT exempt item. So if you read the NHL Amendment Act, the Get Fund Levy Amendment, and the COVID-19 Act itself, they always say the VAT Act, there'll be a clause in there for sure that says the VAT Act applies with the necessary modifications. What they mean is that everything exempt is also exempt here, right? So you'd never find someone saying pharmaceuticals are exempt from VAT, but come and pay me 2.5% Get Fund Levy. No, it doesn't work. It will never work like that. They work together. If that answers your question. Samuel Zanute.
Yeah, thank you. I think I lost you at the point where you were saying something about the gross gaming revenue. You said there will be a tax also on that. Can you please repeat it for me? Thank you.
Oh, sure. I think today Vodafone decided to be my enemy, but I'll deal with them later in terms of you losing me at some point. Yeah, so on that, currently for gaming companies like the Betways, the Sportybet, or whatever they call themselves, for those companies, they pay corporate tax, right? So the same way that you have your revenue trickle down from, revenue trickle down from revenue, cost of sales, expenses, ad backs, get chargeable income, then you pay corporate tax. Then since gaming is a taxable activity, that will also attract VAT. They are saying now that they're going to introduce a gross gaming tax, what I expect is that this will apply on their gross revenue, top line. So if you're a betting company, you make 100 million cedis, a certain tax amount on that. They're like, we don't want the CIT again. Keep your CIT. I want gross tax. That's what it means. So on two levels, there'll be a gross tax on their revenue. We don't know the rate yet. Maybe 1%, maybe 2%, nobody knows, right? But whatever they make in revenue, they will send their tax to GRA. So they don't want to hear, I'm making losses, I want to carry forward. No, pay me a tax on your revenue. Then the next is the implied withholding tax. So when they are also paying bet winnings to those who have won bets, right? There will also be a withholding tax at that level. So the rate was 5% above 2,592 sometime in 2018 until it was repealed. So if the government goes back to that, we expect a 5% rate to apply on any bets winnings you have, right? But we don't know the rate that is confirmed yet until we see the act. So that's it. It will be at the gross revenue level, and the second one at the payout level in terms of withholding tax, if that clarifies.
All right. Thank you.
Okay. I don't think we have any other questions, do we? So yeah, I think we can end here. Thanks for joining. Wait, is that Victor?
Yeah.
You are my last question, so
All right, sure. Thank you very much for this platform. So, apparently, when you were talking about the NFSL, I think I had some network issues. I didn't really get it well. But then I got to the point where you were saying that it has been extended to all companies, that every company is going to pay. So I think from the presentation, I saw some categories of companies, that is A, B, and C. So I just wanted some more clarification on that, where probably fintechs and also edtechs we find ourselves in with regards to the categories.
Okay, so to recap, category A is for all those currently under it, and fintechs are not part, right? Government is saying that all those under category A, they'll add 6 more sectors to those, and they'll pay 5%. I don't know if fintechs will be under those 6 new categories, right? Okay. Category C, you are clearly out because for the extractives, mining, oil, and gas, they will pay 1%. So category B, which is 2.5%, is everybody else. So you have 2 options. If they deem fintechs to be a high revenue area for them, they'll put you under category A, 5%. If not, you pay 2.5 category B. So just budget for either 2.5 or 5%. One of the two.
All right. Yeah. Thank you very much.
All right. Sure. Thanks everyone for joining. We can't take any more questions because of the time. It's been good having you. If you have any further questions, feel free to add us on Twitter or whatever. If we see it early enough, we'll respond. So thanks for joining once again. Have a lovely weekend, and we'll catch you on our next webinar. Have a nice day. Bye.